What's going on, guys? Welcome back to another Bitcoin weekly update. The date is October 23rd, 2018. First off, I want to apologize for the few days of delay on this video. I had a midterm on Monday, so obviously I had to study pretty hard on the weekend, and then I had school on Monday, so I didn't make the update yesterday. But really, we didn't miss anything. You can see here, this is a daily chart I have on my screen. We've just been going sideways, basically a small bull flag on the daily, so we didn't miss much delaying the video. I do apologize for that. Next week we should be back on schedule, but let's get right into it. So like I said, we're kind of seeing a bull flag here. You have that massive breakout right here that I actually called on my last update video. Hopefully you guys watched that video. If you did not, you can go back and watch my analysis. I think it's going to be very helpful for you if you're a new trader, even if you're a intermediate trader, if you're still learning technical analysis. I do go over my reasoning behind why I thought that was a good long, and why you should not have been shorting that. So if you are new, or if you didn't catch the video, go check it out. But a quick recap, basically what I said is it's a yearly support. You've got a ton of support down here. You can see everything that was going below like 6,200 was getting quickly bought up. And that's basically exactly what we saw. It dipped below 6,200, got bought up, and then we saw a short squeeze all the way up to about 6,800. It went even higher on other exchanges. But yeah, we saw a nice breakout. There was a lot of Tether FUD that kind of fueled that breakout. People were worried about Bitfinex and they were worried about Tether, and it just really fed into the whole short squeeze. What we're looking at now is we're looking at a bull flag consolidation of that move. We're resting above the 12 moving average on the daily, which is very good. That shows signs of bullishness, also bullish strength. We are really not seeing any strength in any of these candles. So we're still consolidating. Before we break out either to the upside or downside, we are going to need to see an engulfing candle form on either the top side or the bottom side. Until then, we're really not going to see a big move either way. But I am looking for longs. This is a bullish pattern. If we do dip back into the order block, I will probably be buying below 6,300, or even like 6,320, 6,330, depending on where it wicks. I'm not going to put buy orders in because this thing could fully retrace. I am just going to wait and watch it on a shorter time frame and kind of see where it starts to bottom out. I'll be using my Momo and everything else to determine where it's getting exhausted if it does fail downward. If it breaks out to the upside, I will be buying it probably above this high here. So above like 64.50 is probably where I'll start to look to buy. My first target will probably be the 72 moving average, and then my second target will be 66.40, and then my final target will probably be 67.54, depending on how fast we break out. 67.54 is a very strong level on the daily. I've had this on every single one of my weekly update videos. This is the previous double top before that massive move up. And then you saw that it was kind of the top over here. We failed down, bounced out of it. And then we had a top here and here as well. So it almost has like 4 or 5 tops on that. Maybe 6 if you count that wick. But I will be closing my whole position probably around that level, depending on where we kind of consolidate. And then I'll be looking to buy the dip. So like if we do something like this, I'll be looking to buy the dip. Or if we shoot up and then kind of consolidate downward, I'll be looking to buy the dip on that as well. But I'm definitely bullish here. I'm still not looking for shorts. I may, depending on if I'm scalping at the time, I may take a short on the break of this like lower range. But I really don't know. I'll have to wait to see how it plays out on a lower time frame. But I do post all of my trades in the Discord. I have a trading alert channel where I basically, as soon as I'm taking trades, they're alerted in that channel. So whoever has access can see exactly what I'm doing. So if you guys are interested in that, just check out the Discord. And if not, then just wait for my weekly update videos, and I talk about what I'm doing at least once a week. But what I want to see for the longer term setup is I want to see a clean engulfing candle up, and then I want to see a close above this 72 moving average. Right now, the 72 moving average is at 65.39. So I want to see a close above that level. When we close above that level, we can start to climb higher. I do want to see a close above this level as well, 65.15. So if we break out to the upside, I do not want to see a rejection here. I want to see this continue higher until it gets above this level, and then I can see some consolidation, even a rejection. But I do not want to see a rejection of this level here. So we do have some short-term resistance around 65.40 and 64.70. So that is the level to watch if we do see a break of the range here. If it cleanly breaks this level, you can definitely buy the pullback. I would buy the pullback on the level, buy the pullback to the 72 moving average. That could be really good entries. You could also watch it on a lower time frame. Look for trades above VWAP, staying above VWAP, stuff like that. Trades above moving average. There's all kinds of different setups you can use. But if we look at this on the weekly, let me take away my drawings here. You can see once again, I've talked about this on multiple videos, we are still resting below the 12 moving average. We have not broken the 12 moving average just yet. And that is something we really want to see a break and a close above this moving average. We also wanted to see, we want to see it get above the 72 moving average, but that's going to be a little bit down the road. So we'll talk about that in future videos. Something that I wanted to show you guys on the weekly is we're still making lower highs. So you can see lower high, lower high, lower high, lower high. So if you're trading this on a longer term, or you're kind of looking for that bottom, you're looking for the end of the bear market, you want to see a break of this bear structure. This is the bear structure, lower high, lower high, lower high, lower high. When this is broken, and say we push up and then we form a higher high, and then we need to come down and form a higher low, then the market can turn upward and we can continue. So you want to see a break to the upside. It doesn't have to break this high on the first attempt. I would definitely want to see it break this high though. So we need to push up, we need to break that high, close above it, so higher high, and then we want to form a higher low to confirm. So higher high, higher low, and then we want to push even higher, and then we want to close above this high, and then we can pull back, higher low, and then we can close above this next high here. And you just want to see that standard structure. Obviously, it's not going to be textbook. It's not going to be this pretty, but the overall levels, that is what you want to see. You want to see that higher high and then the higher low. That will confirm the bear market is ending. A lot of people will consider the bear market ending when they see that higher high, but really I like to see that higher low after the higher high. So what I like to see is I like to see that higher high. So I like to see that break, but then I want to see a confirmation from the higher low. I want to see that pullback and that curl. I want to see that close above the lows, above the support. That is my confirmation of a bear market ending. So I will definitely update you guys if that ever happens. You never know. This could be another year of sideways action. I don't think that's going to happen, but like I said, you never know. But that is going to be your first few signals. So if you guys are sitting there thinking, how will I know when the bear market is ending? How am I going to know like when to start buying alts and when to start actually investing? That is what I look for. I look for higher high, confirmed by higher low. I also want to see the closes above these short-term and medium to long-term moving averages. So If you're a moving average trader, you want to see closes above like the 8, the 10, the 12, the 15, whatever you use as a short term. You want to see it close above that. And then you want to see it close above the midterm to longer term levels like the 50, the 70, the 80, 100, stuff like that. And then really far down the road, you want to see it close above the 200 moving average. And then you want to see it trade heavily above the 200 moving average. Then you can consider that the bear market is over. So those are the things to look for, guys. As always, you want to trade safe. You want to use stop losses. Don't try to catch every single bottom. You don't want to be like trying to call the bottom of the bear market every single trade. Just wait for the clear signals, and then you'll know where the bottom is. Trust me, guys, there's a lot of money to be made. You do not have to catch the bottom to make money. There's so much money to be made when the bull market starts. So don't panic. Don't think you have to catch the bottom. That's not the case. One more thing that I wanted to show you guys before we go is this fan principle by John Murphy. He talks about this in one of his technical analysis books. The title of the book escapes me, but basically the theory is when a market is shifting from like a bear market into a bull market, or just even a short term, it doesn't have to be like the entire market. You want to look for 3 points. So you can see like 3 trend lines here. You have the first trend line created here, second trend line created there, third trend line created there. So once you have your 3 trend lines, you want to see them act as resistance, and then you want to see them act as support. Once all 3 of them have turned from resistance to support, or vice versa, that is when the market is beginning to shift. And we can see here, the resistance was created on this line, and then the support was created. Resistance created, support created. Resistance created, support created. So all 3 of these lines that were initially acting as resistance, they are now acting as support. So this market is not as bearish as everybody wants you to believe. We are not going to 3K or 4K in the next week or two. People are constantly talking about these ridiculously low numbers below like 4K. And I'm just thinking to myself, I don't understand where these numbers are coming from. I don't like to look that far into the future. That's why I do these weekly update videos. I like looking maybe a week, maybe 2 weeks. I don't like calling these numbers like 10K or 2K if there's no analysis to back it. And all of my analysis is not backing a 4K or even 5K. So if you guys see all those numbers, always ask people, where are you getting that number? Where's your analysis? If they can't give you an answer, then don't believe the FUD. Who cares? Who cares if they're calling for 5K? If they can't provide you analysis, it doesn't matter. So just keep in mind, guys, like I said, you don't have to catch the bottom. Don't worry about catching the bottom. Ton of money to be made. If you guys like this video, please subscribe. I will be releasing the next one, hopefully on time. So hopefully Sunday around 8:30 to 9 p.m. And I will also be posting more of those videos on the teaching technical analysis. I have been pushing those back. I do apologize, but those will start coming out again pretty soon. I'll see you guys on the next video. Have a good one.